today I have three amazing options for you. I have Fidelity, Charles Schwab, and SoFi. We're going to be covering the best features, the fees, the pros and cons of each, and of course, the $1,000,000 question, that is, which one is really for you. Now, with that being said, I'm going to mention here that I do have each of these organizations as part of my financial tools. Let's put it that way, because I do have Fidelity for one of my retirement accounts. I also have Charles Schwab for my brokerage and Roth IRA. And a couple of months ago, I opened a SoFi Invest account, and I've just been playing with it just to see what it has to offer, and I can share that with you guys. So I will share my experience with all of them, my insight, and the best features, of course, to help you identify which one is for you. Now, before we get into all of the great details of each of these organizations, I want to first set you up with overall approach and personally what I look for when it comes to a stock broker. Because if you don't know what you're looking for, then you are going to be overwhelmed. And so my goal here is to help you cut through all the noise. So a couple of things that I personally care about when it comes to a stockbroker is, what is the barrier of entry? How much money can I start with? Is it $5, $10, $100? How easy is the interface on the app or the website? For example, I've heard of some brokers out there that their websites are pretty clunky, and so people complain about it. Also, how about the fees? How much are we being charged? Because obviously that means the less fees we deal with, the more money, the more wealth we get to build, and access to basic stocks and the overall products that each of these organizations offer, whether it is IRAs, bonds, and like how all of the products are integrated in one stockbroker, if that's what you're looking for. And of course, the simple cash transfers to actually buy. And at the end of the day, the SIPC insurance, which is the equivalent of FDIC for banks. So which of these matters to you the most right now in 2025, almost going into 2026, because this will help you know what to look for in each platform. Okay, so now with that being said, my friends, let's go over the best features and products for these three organizations. And we're going to start with fractional shares. Now, fractional shares, they allow you to buy a piece of a company, of a mutual fund, or an ETF. So with Schwab, you can start with a minimum of $1 if you want to buy fractional mutual funds or fractional ETFs. The same thing with Fidelity, you can start with $1, and SoFi Invest allows you to start investing with a minimum of $5. Now, the main takeaway here is that if you want to buy a piece of whether it is a company or whether it is a mutual fund, it's safe to say that you can start with $10. Okay, if you got $10, then you are good to go to start investing with any of these organizations. So another product or other products and features that these organizations have is they do carry stocks, they carry ETFs. Now, ETFs are essentially a group of stocks in very simple terms. They also carry bonds, mutual funds, and even some crypto. Now, when it comes to crypto, they're not as vast as Coinbase, right? Like they don't carry really crappy meme coins. Like they are very selective with the type of crypto that they have. It's safe to say that all of them have access to Bitcoin and Ethereum. Those are the ones that, in my personal perspective and opinion, are the most solid out there and the most credible. I'm sure there's like a bunch of others, but those are the ones that I'm the most familiar with. So they do carry products that allow you to invest in those crypto assets. So all of these three organizations allow you to invest in all of these very common and very popular options. And they also give you access to invest in a Roth IRA. So for example, if you are somebody that wants to have your stocks, you want to have your index, your S&P 500, and you want to also have your Roth IRA, then you can have all of these essentially allow you to have all of your investments in one place. Now, one really cool thing that I have set up with Schwab actually is I do have my Roth IRA in my brokerage account. So I can actually see everything in one page, how much everything is going, like what the progress is, like any gains, any losses. So that's actually pretty cool. Now, another really cool feature that these organizations provide is the cash management option. Now, if you're not familiar with cash management, the main advantage that I see these cash management provide is essentially they are a high yield checking account with investing features, with investing access or option. So that's the way I personally see it. If you look at what, let me just go to one of these. For example, Schwab provides you with cash management accounts currently at 4.31, 4.16, depending on where you put your money, these two funds. Also, Fidelity has great cash management account options. They have their money market fund 3.97 right now, and the deposit sweep program at a lower rate. I've actually talked about these options in the past here in the channel, so I suggest that you watch the video on cash management accounts. But it's a great way for you to just maximize your money that you have sitting there while you are waiting to invest it. Now, the only difference here between these three options when it comes to cash management is that SoFi technically does offer a cash management account because the checking account they give you, it allows you to buy directly stocks and ETFs, but they don't give you as much of a high APY as Fidelity and Schwab. And it's almost like SoFi provides you a very basic cash management account, but Fidelity and Schwab give you a premium version of a cash management account. So if you're somebody, why is this relevant? You might be wondering, like, why do I care if I'm looking into stockbrokers? Well, if you have, let's say, a couple hundreds or thousands of dollars that you're just waiting for the market to dip, if you want to buy the dip or you just want to buy on demand, depending on what kind of analysis you see in the stock market, then a cash management account is going to allow you to have your money right there and allow you to make that purchase. Unlike if you don't have a cash management account, you're going to have to go through the transfer process, maybe wait a day or a couple of days until your money goes through, and you might miss out on opportunities when it comes to buying the dip. So that just give you some insight right there. I've noticed that cash management accounts are actually becoming a little bit more popular. So it may be a good option if you are looking into that. Okay. All right. So enough about cash management. So now let's look about the fees, right? Something that is very, very important. The fewer or the less fees we have, then obviously more money we get to make. So when it comes to commissions for stock investing, then Schwab, Fidelity, and SoFi have zero commission trades for passive investing. That is like you just buying and then just letting it sit there. So you can go and buy $5, $10, and they're not going to charge you a commission fee. At least that's what they say on their website. Whenever I buy $100, then I do get $100, right? That's what my experience has been. So all checks out. Now, here's another option that you may consider, or maybe you've never considered before. Maybe this could be a good one for you. Now, they also provide, all of these options provide a Robo Advisor feature. Now, you might be wondering, what in the world is a Robo Advisor feature? Basically, what it allows you to do is it allows you to automate your investing, and it manages your portfolio of investing, how much stocks, bonds, or like mutual funds, whatever. And it automates all of that process, and it gives you recommendations based on your risk level, based on your age, based on your own circumstances. So if you want to get started with Schwab, they don't charge you a fee to use the Robo Advisor feature. And the way that you pay, however, is via the expense ratio from the Schwab ETFs that Robo Advisor buys. So essentially, they don't charge you a Robo Advisor fee, but your account will end up buying Schwab ETFs and securities, and that's where they'll stick it to you, right? They put in the fee in the securities and ETFs that you buy. Now, all of the mutual funds, all of the ETFs do come with an expense ratio, which I will touch on here in a second. Now, if you want to go with Fidelity and use their advisor, the Robo Advisor feature, then they do charge you 0.35% for $25,000 balance plus. And if you don't have $25,000 in the Robo Advisor, then they don't charge you a fee. So it's actually a great way to get started with Robo Advisor if you want to kind of test it out with like $100, $1,000, however much that is. I think it's really good. Now, SoFi just gives you a 0.25% Robo Advisor fee flat, and whether that is 100, 1,000, however much, the minimum for the Robo Advisor is $50, by the way, for SoFi. So what do you think so far, by the way? I would love to know your insight, your take, your experience maybe with any of these options so far. Maybe you've already kind of like dipping your toes in the stock market and all these features. Now, one thing that I'll make clear here is that these fees are just for the broker fees. They do not account for the expense ratio that whatever your fund charges you, right? Except Schwab, which charges you through the ETFs that your robo advisor buys. So if you don't know anything about the expense ratio, then it's basically a fee that pays for the fund that you buy, whether it is ETF, mutual funds, index funds. This expense ratio, it is not applicable to stocks. Now let's go over the pros of each of these organizations, because this may make or break your decision and whether or not you go with them, right? So when it comes to Schwab, they do have the 0%, their $0 commission plus no robo advisor fee. They also give you fractional shares with $1 minimum. I actually do buy the S&P 500, like I buy $100 from a Roth IRA every single month. And also, they do have a strong reputation and in-person branches. I believe they got about 300 branches all over the United States. Fidelity also has some branches, but it's not as vast as Schwab. They call them investor centers. It's not like Bank of America, right? They have branches like everywhere. Manage expectations there. Now, Fidelity, the pros of Fidelity, of course, it is a very comprehensive platform. In fact, as I was doing research for this, I noticed that Fidelity has in-depth research and analytical tools. And I want to say that this is more for advanced investors that really want to get into the weeds and ratios and profits and losses for each company and each stock. So if you're just getting started, then it's something that it may not be quite relevant yet, you know? So personally, as a beginner, I remember that it was just all about, hey, let me just buy ETFs, S&P 500, and that's it, right? Like, just let me just get started and getting to know all these terms. Now, Fidelity also has strong retirement options, just like Schwab, by the way. These two are very, very similar. And Fidelity is also excellent for traditional Roth IRAs and robust retirement planning tools. And it also provides you, of course, with fractional shares with $1 minimum. So as you can see here, Fidelity and Schwab are actually two very strong, reputable, with a lot of pros and advantages. Now, SoFi Invest is a little bit different. They do have a lot of powerful features, but they cater more so towards somebody that is more modern, in my personal opinion, and somebody that is also a little bit more of a beginner. So SoFi Invest, the pros, is like beginner friendly. It's got a simple interface. They do give you cash bonuses to sign up. They give you an all-in-one hub if you want to have your checking, your savings. They give you right now a $300 bonus to sign up with them, and that's pretty good, right? And also, there's got a low barrier to entry with a $5 minimum for fractional shares, $0 trading, and $50 for the Robo advisor. So it's safe to say that, as I mentioned, if you got $10, you can start with any of them. It's just really going to depend on, okay, who do you like? All right, so now with that being said, let's go into the cons of each organization. So Schwab, on one hand, one of the cons is the $5,000 minimum that the robo advisor requires, and that's pretty high, right? So again, this is really going to depend on whether or not you end up using the robo advisor. It may not be for you. If you can just do it on your own, then you can literally just get started with $1, $10, and you're good to go. Also, Schwab, I must say, I've been using this Schwab for the last couple of years, and it does have kind of an old school interface, but I mean, honestly, it doesn't bother me, but I can see how some people may be like, oh, I want more modern features. But so this is really going to depend on your perspective and the way you look at things. Now, Fidelity, on the other hand, they do have a 0.35% robo advisor fee for balances $25,000 plus, and it's a little bit higher than the fee-free robo advisor, right? And also, the interface can feel complex for Fidelity. As I mentioned previously, Fidelity's got a great reputation for having in-depth analytical tools, which for a beginner, as I mentioned previously, it may be a little bit overwhelming. Now, it's also got slower transfers. Now, this actually comes as part of a comment or a couple of comments that I received from users from Fidelity who use their cash management account, who mentioned that transfers to their bank can take anywhere between a week to even 20 days. So it's a little too long, in my personal opinion. But again, if you're somebody that is a planner and you are okay with those transfers, I'm not saying it's always going to take that long, but I just want to give you here some caution so that way you know what you're signing up for. Now, SoFi, of course, also has a couple of other cons. They do have a fractional share higher minimum, so you don't start with $1. With SoFi, you start with $5. it is a $4 difference, but hey, it is what it is. It is a con in that way. Again, it just depends. A lot of people watching this video may be like, dude, it's $4. I get it. I just wanted to mention it here. Now, also, they do have lower APY on their cash management feature, which, as I mentioned, they don't really thrive on cash management. They thrive more so on the high yield savings account portion right nowadays. SoFi is offering up to 4.5% with the high yield savings. So in a way, the high yield savings account from SoFi does compete interest wise with cash management interest rate that Fidelity and Schwab offer. So that right there, you can kind of get around the interest rate argument in a way, right? Now, another thing to consider with SoFi is that it's a little bit less robust. It has good for basics, but limited advanced research compared to Fidelity and Schwab. So, my friend, which one is for you? At the end of the day, the way I see this, Fidelity is ideal for building a retirement-focused investment hub, whether it's a 401k, traditional, or Roth IRA, and it's built for long-term growth, right? So it's also cost-conscious investing, access, zero-cost index funds, commission-free trades, and a seamless cash management account. And of course, it's got robust analytical tools. So if that's you, then Fidelity could be a good option for you. But Schwab is not too far behind, right? Because Schwab is also a giant in the financial space. Or if you want a well-rounded, beginner-friendly experience, Schwab does offer strong support, robust research tools like Fidelity, and intuitive navigation, of course. They also have the ATM fee rebates, like Fidelity also offers that. And they also are a dependable all-around broker with cash management features. Now, SoFi, on the other hand, a little bit different, adding a little bit of different flavor here to the mix. It's perfect for new investors. If you are somebody that want to start with $5, maybe you want to take advantage of the sign-up bonuses, the automated features, and a streamlined experience where you want to have all your banking in one place, maybe student loans, maybe you want to have also like mortgage and like a bunch of things, right? So I think at this point, you already kind of have an idea of which one is for you. And so here's my overall takeaway. As a beginner, honestly, I don't think you can go wrong with either of these options. Fidelity and Schwab are great, reputable brokers, and it really will come down to who you like best and whose ecosystem you want to or you are already part of. So for example, if you already have all the stuff with Fidelity, your retirement accounts, then it's just, to me, it's just like, well, might as well just open quickly. Your information was already there. Just open a Roth IRA or start your brokerage account. If the same thing with Schwab, that's how I ended up opening my Roth IRA with Schwab. It's like, hey, like I already have my brokerage account here. Let me just open a Roth IRA. But I do understand how SoFi could be also great for beginners and for those especially who already have SoFi features or SoFi accounts in their money ecosystem. So if you're somebody that is already part of the SoFi ecosystem, or you want to start as a beginner with SoFi just because you like it, you can also take advantage of sign-up bonuses with SoFi. Then if this is for you, then sign up through the link in the description of this video, and that's going to help you get started with the bonus, and you can get started with a high-yield savings account or a checking account, or even getting started with investing. So remember that the best time to plant the tree was 20 years ago, and the second best time is now. So which one is for you? I would love to know. Thank you guys for being here. Make sure to like, comment, subscribe, and most importantly, share. I'll see you guys on the next one. Peace.